Welcome to our channel, Ayakar Kamkar. In this video, we are going to discuss how Budget 24 has brought in a few changes in the taxation of long-term capital gains on sale of foreign shares. Do you hold shares of Nvidia, Broadcom, Google, etc.? You might have either purchased these shares directly from the market, or you might be working in any of these companies and might be holding shares in the form of employee stock option plan. Budget 24 has brought in a few changes in the long-term capital gains taxation. There are only two holding periods, less than or equal to 24 months and more than 24 months. There is no more indexation benefit available for sale on foreign shares. This is nothing but adjusting your cost of acquisition based on inflation. The tax rate on long-term capital gains is 12.5%. The above changes are applicable from 23rd July 2024. Let's assume you hold some foreign shares. The holding period is 24 months or less. It will be considered as short-term capital gain. If you hold these shares for more than 24 months, it will be considered as long-term capital gain. In case of taxation, short-term capital gain will be taxed at individual slab rate. In case of long-term capital gains, taxation will be at 12.5%. Let's assume Mr. X has sold foreign shares of Rs 30 lakhs. The cost of acquisition is 5 lakhs. The shares were acquired on 2019. The expenses on transfer are Rs 5,000. The cost of inflation indexed for 2019-20 is 289 and for 24-25 is 363. There are two scenarios. The selling the shares on or before July 22nd, 2024 and on or after July 33rd, 2024. The sale consideration and expenses on transfer remains the same. The only difference is the cost of acquisition. For shares sold on or before July 22nd, 2024, you take indexed cost of acquisition. In the case of shares sold on or after July 23rd, you take the actual cost of acquisition. In this case, you have 20% tax, which comes to 4,73,394. In the other case, you have 24,95,000 capital gains, and at 12.5% taxation, it comes to 3,11,875. You end up saving taxes of 1,61,519. This is because the more the holding period, better will be the indexation benefit. In case of shares, since because of the uncertainties in the markets, taxpayers generally tend to sell the shares in 5 or 7 years, and hence the indexation benefit is less, but you still end up paying 20% tax. But without indexation, with 12.5%, it could really help you in saving your tax liability. Subscribe to our channel Ayakar Kamkar for further updates and mail us for any tax consultation at ayakarkamkar@gmail.com. In our upcoming video, we will be discussing how to save your long-term capital gains tax by making a few investments. Thank you.